Recently, the Labubu craze has swept the globe like a surging tide. From trendy districts in bustling metropolises to lively social media platforms, this little monster with 9 teeth and an ugly cute vibe is everywhere. Take a moment to reflect. Have you or someone you know impulsively pulled out their wallet to buy these dolls amid the frenzy? Some spend a fortune to complete a full set, others queue for hours outside stores for limited editions, and some even bid exorbitant prices for rare designs on the second-hand market. Behind these seemingly simple consumption behaviors lie complex psychological mechanism zones that not only shape our Labubu purchasing decisions, but also subtly reveal the symbiotic crisis between our financial and mental states. Let's delve into the psychological drivers behind the money decisions fueling Labubu's sensational rise. Many collectors believe they're amassing Labubu figures out of lifelong love, a mindset rooted in the psychological end-of-history illusion, the tendency to underestimate future personal changes, assuming current values and goals will remain fixed, like a young person determined to become a doctor who can't foresee future career burnout or shifting passions. American financial therapist Nathan Astler found that people are especially prone to this illusion when consuming, mistakenly thinking their current need for social currency is everlasting. In reality, once you complete a Labubu set, the novelty quickly fades with the next trend, and those once treasured dolls often end up as forgotten, idle items on second-hand platforms. It's like the stickers or cards we hoarded as kids, convinced we'd cherish them forever, only to abandon them on dusty shelves. Pop Mart's hidden editions and limited-time purchases. Rules restrict consumption freedom, yet paradoxically fuel stronger buying urges, a phenomenon driven by Reactance theory, where people resist to restore control when choice is constrained, like the author who quit an investment bank internship over strict work-hour rules, e.g., if you don't work Saturday, you can't come Sunday, losing time autonomy. This instinctive resistance to forced choices in consumption manifests as, the harder a design is to get, the more consumers pay a premium. Data shows 62% of Labubu blind box repurchases stem from obsession with unowned designs, a psychological trap that lures people into a the more restricted, the more they buy cycle. Social media's showcase craze is pushing many Labubu buyers into blind comparison. Platform data shows 73% of consumers admit purchases are influenced by friends' collection sizes, with some even borrowing money to flaunt limited editions on social feeds. Anchoring self-worth to how many rare items one owns is a classic example of social comparison theory defining value through others, which triggers risky overspending. When we see others post limited edition Labubu online, we subconsciously equate ownership with worth, ignoring the financial risks of this competitive mindset. When splurging on Labubu, we often tell ourselves, this is a sound investment, ignoring that the 1.08 million yuan sale is a tail event, extreme, low probability events that skew outcomes, like Warren Buffett's 84.5 billion fortune. 81.5 billion came after age 65, where compound interest amplified tail gains. Disney escaped bankruptcy thanks to Snow White, a tail event that offset 400 yuan previous short film losses. We also fall for the narrative fallacy, using the simplified story of Labubu appreciation to explain complex markets, ignoring randomness. PopMart reports show 83% of blind box collectors quit within 6 months. The appreciation myth is pure survivor bias, like pre-2008 investors who believed houses only rise, ignoring subprime warnings, and crashed due to confirmation bias. These psychological drivers create a financial mental health symbiotic crisis. A Beyond Finance survey found 1.4 avoid healthy finances due to stress-skipping budgets, delaying savings. This avoidance snowballs. Anxiety drives overspending, which fuels more anxiety. Like young people who drain savings on Labubu, spiral into depression over bills, then numb themselves with more shopping, creating a mental imbalance, financial crisis loop. Worse, emotional disorders distort decisions, Anxiety sufferers blow small expenses into crises, and individuals can't resist blind box instant gratification. In one case, a bipolar collector spent 280 yuan on a full set during Mania, then sold everything at a loss. During depression, emotion hijacked spending reflects psychological states in financial choices. Beyond the psychological mechanisms discussed, the Labubu craze also vividly exemplifies the anchoring effect and mental accounting, two cognitive biases that subtly manipulate consumer decisions. These mechanisms work in tandem with Pop Mart's marketing tactics, turning casual buyers into compulsive collectors without them realizing the invisible strings pulling at their wallets. The anchoring effect refers to how humans rely heavily on the first piece of information, the anchor, when making decisions, often ignoring subsequent data. Pop Mart masterfully employs this by pricing limited edition Labubu dolls at exorbitant levels, such as the 1.08 million yuan secondary market transaction for a mint-colored original model to establish a psychological benchmark. This astronomical figure serves as an anchor, making the standard blind box price of $22 seem remarkably reasonable in comparison. This strategy mirrors the 1990s.com bubble, where investors anchored stock values to the inevitable growth of tech companies, disregarding meager earnings. In Labubu's case, the anchor isn't just a price tag, it's the narrative of investment-worthy collectability, propagated via social media. When consumers see headlines like, "Labubu sells for 1 million, their brain unconsciously uses this as a reference point, justifying purchases of affordable blind boxes in hopes of striking similar luck. A behavioral economics study found that consumers presented with a high anchor price are 37% more likely to overpay for related products, a statistic that likely contributes to Labubu's 62% repurchase rate, driven by unowned styles. Consumers also fall prey to mental accounting, a bias where we divide money into imaginary accounts, e.g., entertainment, savings, investment, rather than treating it as a unified resource. Labubu buyers often categorize expenditures under a social currency or emotional fulfillment account, decoupling them from practical financial obligations. This is analogous to the tech executive in the case study who squandered gold coins on frivolous expenses, treating wealth as a show-off fund rather than a rational asset. Pop Mart's marketing reinforces this segregation by framing Labubu as a lifestyle investment or creative inspiration, encouraging buyers to justify purchases as self-improvement rather than indulgence. A survey of Labubu collectors found that 58% rationalized spending by labeling it investment in personal happiness, while 32% admitted using credit cards to fund purchases without adjusting other budgets. This mental segregation leads to disastrous outcomes. Just as the bipolar disorder patient who spent 280 yuan during a manic episode, consumers with blurred mental accounts often overspend without realizing the cumulative impact on their overall financial health. The combination of these biases creates a perfect storm of irrational spending. The high anchor price of limited editions, e.g., the 1,080,000 yuan doll, not only justifies regular blind box purchases, but also shifts the mental categorization of Labubu from toy to collectible asset. This reclassification allows consumers to allocate more funds to the Labubu account, while neglecting essential areas like savings or debt repayment. Moreover, the hidden edition mechanism leverages both biases. The rarity of hidden figures, 1 in 144 blind boxes for example, becomes an anchor for exclusivity, while the cost of chasing these figures is mentally framed as a necessary investment rather than wasteful spending. This is similar to how lottery players justify spending $412 annually on tickets, mentally accounting for it as the only chance to escape scarcity, ignoring the 1 in a million odds. In Labubu's case, the scarcity mindset amplifies both biases, making collectors willing to pay 300% premiums for hidden editions under the illusion of strategic investing. The dangerous reality is that these cognitive biases are not accidental, but engineered. PopMart's business model thrives on exploiting the anchoring effect and mental accounting, turning casual buyers into repeat customers through psychological manipulation. As one Labubu collector confessed, "I started with one blind box for $22, but seeing others sell limited editions for thousands made me think I was missing out. Before I knew it, I'd spent $50 on a hobby I thought was affordable." This scenario mirrors the 2008 financial crisis, where homeowners anchored to rising housing prices and mentally accounted for their homes as cash machines, leading to subprime mortgage disasters. In both cases, cognitive biases enabled systemic overvaluation and reckless spending, proving that the Labubu craze is not just a trend, but a textbook example of how psychological mechanisms can drive mass financial irrationality. So, how to make rational decisions in the upsurge? Behavioral economists suggest using de-anchoring techniques, such as researching the actual production cost of blind boxes or consulting secondary market data to reveal the true value behind the hype. Similarly, merging mental accounts by tracking all Labubu-related expenses as part of overall discretionary spending can expose the real financial impact. As with the three-question framework withstood earlier, adding, "What else could this money buy?" can help recontextualize spending beyond the manipulated anchors. In the end, the Labubu phenomenon teaches a profound lesson. Behind every viral consumer trend lie carefully crafted psychological traps. By unmasking biases like the anchoring effect and mental accounting, we can transform mindless consumption into intentional choices, ensuring that our wallets, like our minds, remain free from invisible manipulation.